Good afternoon, everyone, and welcome to Stock Market Today. You have Alyssa Corum here, and I am joined by Ed Carson. We've got a lot to discuss today, don't we, Ed?
Yes, we do. Amazon broke out of a base. Zoom Video cleared an entry point, and Walmart had great earnings, but the stock didn't seem to act like it.
Yeah, so some interesting action to parse, but first let's take a look at the major indexes. We're starting off with a look at the S&P 500. We're usually looking at the NASDAQ, which also had a nice day today, but the S&P 500 closing up about 0.2% today, but it was a record day for the S&P, Ed.
Yeah, it backed off a little bit, and so today's action, the S&P wasn't super exciting by itself, but that's, it went down a long way, and it has come all the way back. Obviously, the NASDAQ's already done that, but it's really amazing when you think about how the economy is still struggling. How well this has come back. This is positive. The NASDAQ hit another high. So a lot of strength in there. There was actually a lot of losers today, but those losers tended to be smaller in size and smaller. Their actual percentage declines were smaller. So, this is why the major indexes, at least the S&P and NASDAQ, were strong today.
Yeah, S&P, like I said, finishing up just 0.2%, but the NASDAQ up another 0.7% today. So just continuing to climb higher with tech clearly still in the lead here overall in this rally, even though we have seen, some rotation here and there. But Amazon had a notable day today, up over 4%. So strengthening after consolidating and trading in a bit of a tight range with a little bit of outliers in recent weeks. But overall, some nice and tight action, and Amazon breaking out today in some nice volume.
Yeah, I mean, technically the buy point is right above the old high, but that's from the July 13th reversal day. Almost all of the trading, we were hitting a buy point, like hitting resistance around 32.50 or just below that. And today we blew by that. Strong action here. This is one of the biggest companies out there. This is a big reason why the S&P and NASDAQ had such a strong day. And we added this to Swing Trader. We bulked it up the position. It was already on leaderboard, but made it a full position. And you can see why. It's just been doing great. It's been basically riding the 21-day the whole way up.
Yeah, I mean, and Amazon, one of the first to break out in the rally, and it really hasn't looked back. But when you look around you, not just the technicals, but what's really happening with that business, there's definitely an impressive case to be made. And similarly, that could be said in a slightly different way for Zoom Video and its expanding business opportunities with the onset of coronavirus, and Zoom eyeing a new buy point here of its own, also tacking on another 4% today. This one was a little bit tricky to handle in recent sessions, but it's now come roaring back.
It's come roaring back. There's a lot of different ways you could play it. There's various, sort of obscure buy point scenarios, but it rebounded from the 10-week line, 50-day line yesterday. That was an entry. And then as you're marking there, that was sort of an entry, sort of a mini double bottom. Doesn't, I don't know if that would qualify. It's pretty short, but you can sort of see that action. It got above that. So that's another buy point today. There haven't been a lot of opportunities to buy this. This stock has been pretty volatile, and that should be something investors are aware of. This could come back a fair amount, but it's nice to see some legitimate entry points in this stock, which has clearly been one of the very big winners of the coronavirus crisis.
Yeah, it has. And we do want to point out, though, that it does have earnings at the end of the month. So with this breakout today, I mean, that's kind of sliding in there in terms of giving you a big enough window for a chance of building a sizable cushion heading into the earnings report. What's your view on that aspect?
That is a very good point, especially with something like Zoom. You would imagine that it could move up or down a lot. So you might want a bigger cushion on this than, say, a Costco, which is probably only going to move so much. The hope and fear with a stock like Zoom is going to be a lot more. So yeah, I mean, you can play this, and it may be that you decide, I'm going to take my profits or take a lot of them or switch it to an options play. or you could just say, I'm not touching this. I'm not touching it. It's too close to earnings. Those are all legitimate ways of handling this.
Yeah, and speaking of earnings reactions, Ed, you mentioned at the top of the show what happened with Walmart here, a big outside day, downside reversal, finishing lower by about 0.8%. And it wasn't necessarily the earnings that got the stock down. Surprise 23% gain for the bottom line, strong same store sales, but it was something that management said that spooked investors a little bit.
Yeah, I mean, what they said is basically that sales are starting to normalize. That huge surge that we saw during the pandemic shopping. There was the stimulus checks that came in, or the extended jobless benefits, and some of those benefits have now faded away. And so their same store sales were only 4%, up 4%, which is fine, which is actually a decent number, but not what we've been seeing in the past couple of quarters. So that was not good for news for Walmart, which actually we've been treating 134.23, sort of the sort of base next to base, or consolidation next to the base, as the buy point. It did hold that, which is nice. But you also say there was a lot of negative reactions with a lot of other discounters too.
Yes.
So that's something to watch. Whereas even if you don't care about Walmart, Ollie's had a bad day. Target has earnings tomorrow. Dollar General pulled back, still in a buy zone. So there's just a lot of things. Sometimes you want to pay attention to these giants, even when, you might say, oh, it's a little slower, or I'm not interested in it. They still move their sectors.
Yeah, and I do want to look at this intraday chart here, because we talk about looking at the first 5-minute bar, but beyond that, seeing if it can take out the first hour high. When you get these downside reversals on earnings, it's never fun. But that's where looking at these intraday charts could potentially give you a little bit of an edge.
I think that's a great point. I should have said this. Walmart was up 6% in the pre-market. I mean, it was huge because the numbers were great. It was only when the commentary and the
Yeah.
slides came out, and it turned about flat when it opened. But buying overnight and buying in the first few minutes is pretty risky. You're usually better off waiting a few minutes, even if, yes, every once in a while you don't get the best price possible.
All right. Well, we will see how the remainder of earnings season shapes up. You mentioned Target out tomorrow, so we'll see what management has to say for that. All right, everyone. Thanks for joining us today, and you can be sure, as always, the conversation continues on IBD Live. And Ed, actually, we have a webinar coming up as well. Do you want to give a little shout out to that?
Yeah, Justin Nielsen and I are talking about managing your portfolio, and like how to organize how many stocks you should own, and we're going to talk about how it's changed from in the new era there, about how we used to do it and how we now have maybe more stocks. So I think that'll be really interesting. That'll be at 2:00 tomorrow.
Yes, 2:00 Pacific.
2:00 Pacific time. That's right. That's how
Perfect. All right. And you can check out all the details over at investors.com/webinar. All right, everyone. Thanks for tuning in, and we'll see you right back here tomorrow.